Guys, this is SP 500 weekly technical analysis for the week of June 16th. Last week in my previous SP 500 weekly technical analysis, I mentioned that at most the SP 500 can move up will be 606x only. And this was the previous SP 500 weekly technical analysis. Okay, and here you can see 606x. So I mentioned that maximum to 606x. So it will fall either from 606x or somewhere in between 604x and 606x, but it will fall and it will come down no matter what. So what we have seen here, the high was 6059.40. It came down and was supported here at the small zone. Next day it tried to move up, and then on Friday it further come down. Now the question is that if the S&P 500 comes down from here, okay, a failure from here, then what will be able to hold the fall? It will be the confluence zone. And in the same weekly technical analysis, I mentioned that there is a confluence zone. This confluence zone will be able to hold the fall, any kind of fall from the 606x. And the same I mentioned to my Patreon community members again and again every day in the pre-market analysis, in the midday update, that see, this is the movement, this is the trend, and at most it can move to 606x, but again it will fail. It will fail because it has to fail. Okay, and whenever it comes down, then the heavy support will be at the confluence zone. So this was mentioned again and again. Yes, yesterday it was a little different, because yesterday, if you notice, in my pre-market analysis, so pre-market analysis is given 1 or 2 hours before the stock market, and here I mentioned that although we are anticipating a heavy gap down open, but the confluence zone is there to hold the fall, and then there will be a bullish push. This bullish push will initially be limited to the small zone, and then once it recovers the small zone, then it will move to 602x. 602x will be the maximum under the normal circumstances. However, only if there comes 2 consecutive closings above the 602x, then only it will be able to move towards 604x. Otherwise 602x only. This was for yesterday. And if you notice, yesterday the high was 6026. Okay, open was 6000 and the low was 65963. Okay, all of the conditions that I mentioned yesterday in the pre-market analysis to my Patreon community members fulfilled, that no matter what, the S&P 500 will find heavy support at the confluence zone, then there will be a bounce or a reversal retrace from the confluence zone back to the 602x. Okay, this was there. Before that, it was clear that it will fail from 606x or somewhere in between 606x and 604x. So now you can see the accuracy, okay, that was achieved in the previous week through the weekly technical analysis and through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. Now question is that what will be the impact of this, the upward movement, then the fall on the S&P 500 in the coming week? Okay, so now it's very simple. What we know is that as long as S&P 500 is holding and sustaining above the confluence zone, okay, there will be no fall, or any fall will be restricted. Okay, rather S&P 500 will remain in a condition to move up. Now when it moves this time, then the 606x, this heavy resistance of mine, okay, in that case it will be able to restrict the bullish movement only for one day, not more than one day. Okay, last time it was under compulsion that 100% it has to come down, but this time it will not be. Okay, but the one day it will clear all of these things. If it sustains, then more bullish movements towards 6147. If it fails, then it will be coming down, no more bullish movement as of now. Okay, so when I say as of now, I means that for next few weeks you can say, okay, because on Wednesday the FOMC event is scheduled, so we are anticipating then continuous fall. Now, so how exactly it is going to work, so that I'm going to discuss in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. So I have divided this S&P 500 weekly technical analysis in three parts. So in the first part, I will do the technical analysis of the S&P 500 on the weekly chart. Weekly chart means the long-term picture, the big picture, okay, trend, etc. In the second part, I will discuss the S&P 500 technical analysis on the daily chart. Daily chart means the short-term picture, okay. In the third point, I will discuss, or in the third part, I will discuss the probable movement of the S&P 500 in the next week. So just like last time I mentioned, at most it will be able to move up to 606x, then a failure, but any fall will be handled by the confluence zone and then a reversal. Okay, so that's the probable movement. Now let me remind you once again that all of these three parts, all of these three sections are interrelated and are interconnected. So when I say the probable movement, so by the time I discuss the probable movement in this, the third part, then I would have already discussed the 30 to 40% of the probable movement in the first and the second part. This is why it is recommended that you should watch all of these three sections, three parts, in order to understand what is going to happen in the S&P 500 in the next week and in a manner to the entire stock market. Now guys, I'm going to discuss the first point of the agenda, okay, and this is the weekly chart. Okay, so W as in weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, weekly chart. Now, let's first analyze the candle. If you notice, this is the last candle. This last candle is a normal bearish candle. Okay, normal bearish candle. What does this mean? This means that yes, there are bearish sentiments, or there were bearish sentiments at the time of closing. Okay, but these bearish sentiments are not enough or not strong to bring down the S&P 500 or the stock market. Because if you notice the last 3, 4 or these weekly candles, these are very heavy weekly candles. And if we compare this the last weekly candle to all of these candles, then it's a normal, okay, it's a regular bearish candle. Okay, so what does this mean? Again, that on Monday there will be an initial or intraday bearish movement, but that does not mean that there will be fall or heavy fall. For the heavy fall, there is a condition. Yes, there is a very specific condition for a heavy fall. This can trigger very heavy fall, okay, and can push the S&P 500 back into the 5,800 range. Okay, but that I will discuss in the daily chart section. Okay, so the candle is supporting an initial or intraday bearish movement on Monday and nothing more than that. Okay, now comes the Dow Jones. Now if you notice Dow Jones, yes, the candle is heavy. Okay, this is the last weekly candle, and other than that, the most important part is that the closing of this candle, the last weekly candle, is below the open price of the previous weekly candle. So Dow Jones is really bearish or is really heavy. Okay, and also Dow Jones is the only index through the weekly chart which is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, again I'm talking about the weekly chart. Okay, so in the Dow Jones, now a very special condition is there in the Dow Jones, very special. Okay, and this can trigger 20 to 25% fall, small correction, not a small but a regular correction. So first let me cover the technical indicators and then I will discuss about that, the correction part. Okay, now in terms of the technical indicators, what we can see here is that S&P 500 is bullish through the moving averages on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart, and it is neither overbought nor saturated. So S&P 500 is 100% absolute bullish on the weekly chart. So as such, there is no problem in the S&P 500. S&P 500 is in a very good shape, means bullish. Okay, there is no problem as such. Now the Dow Jones. Problem is in the Dow Jones. If you notice, Dow Jones is neutral through the Ichimoku cloud. Dow Jones is neutral through the moving averages. Dow Jones is bullish through the Bollinger Bands on the weekly chart. Dow Jones is bullish through the MACD on the weekly chart. Dow Jones is bullish through the stochastic RSI on the weekly chart. So in this manner, the Dow Jones will be seen or considered as like only 70% bullish. Only 70% bullish. That's it. Last week it was 80% bullish, but this time 70% bullish. So S&P 500 is 100% bullish. Dow Jones is 70% bullish. What does this mean? This means that even if there comes fall, okay, then also the market means the entire US stock market will be in a condition to recover. Okay, but last time the probability of a fall was there, but it was limited, and any fall will also be limited. Okay, but this time the probability of the fall is there. Okay, it may be more than expected, but again chances of the recovery or the retrace are still there. Okay, so now let's talk about the most important condition here. Okay, and this condition is seen in the Dow Jones, not in the S&P 500. What is this condition? This condition is the moving averages. Okay, moving averages were supposed to give a bullish crossover so that there comes a safety, okay, or a safe, like a feeling that yes, the market is going bullish, market can sustain bullish, fine. But now this safety, okay, or the safe feeling is not there. Why? Because of the moving averages. Because the moving averages so far on the weekly chart of the Dow Jones have not given a bullish crossover. Rather, moving averages are forming a slip. What slip? A bearish slip. What happens when the bearish slip is formed on the weekly chart? Okay, a minimum of 10% fall is seen. Okay, and this is like you will see it always in the stocks, okay, or the indices. That is the problem. But now, has this bearish slip formed? No, not yet. Okay, but if in the coming week, if in the next week, okay, the week of June 16th, if in this the week there comes a good red candle, okay, it can be triggered, it may be triggered because of any news, okay, or if not, then FOMC event is there on Wednesday, then the FOMC event can trigger this fall. Okay, if there comes this heavy fall, if there comes a good or heavy bearish candle next week, okay, then in that case, yes, there will be a confirmation of the bearish slip. Once there comes a confirmation of the bearish slip, then the entire market will slip into the correction and then eventually to the recession. But recession, okay, we need one more confirmation from the Feds. Okay, though they have mentioned in the FOMC minutes that the recession will be there in next 6 months, but a correction can be seen through the technicals, no doubt about that. Once the Feds confirm the recession again, then this correction will turn into the recession, no doubt about that. But guys, no matter what is going to happen or what will happen, okay, if you are my Patreon community member, then you need not to worry about any correction, recession, bullish, bearish or anything. So you can simply join my Patreon community and I will give you the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday. Okay, the pre-market analysis before the open of the stock market, the midday update after 3 hours, okay, and then the final update 1 or 2 hours before the closing of the stock market. So I will give you all of these precise updates every day and you will feel more confident, okay, and you will be able to save yourself from getting trapped, okay, or the heavy fluctuations in the market. And guys, that's not all, because I also give the stock market opportunities minimum 5 to 10 every week to my Patreon community members. These stock market opportunities are given from the top 30-40 companies of the US of the S&P 500, okay, means the blue chips, okay, minimum 5 to 10 opportunities every week. And that's not all, because I also give the S&P 500 midweek update every week, okay, on Wednesday or Thursday. So this midweek update is a video technical analysis where I discuss all of these things. So the exact fall was discussed in the midweek update, that first it will move up and then to this level it will then fall, then it will be handled by this, then it will move up, then again it will fall, then again a retrace. So it was discussed in a very precise manner in the midweek update that was published last Wednesday on June 11th. So guys, whenever you want to get all of these, the daily precise updates of the S&P 500, Dow Jones, and also the midweek update and also the stock market opportunities, everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile. Then you will see this tab, okay, the see membership option. So when you open this tab, then you will see that there are these three levels: level 1, level 2 and level 3. The level 1 and level 2 are same, the only difference is in the geographical location. Okay, so when you subscribe either of these two, level 1 or level 2, then you will see that you will get all midweek update videos every Wednesday or Thursday. Okay, daily SP500 analysis, updates, movement, levels and zones every day from Monday through Friday, and the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market. Now this level 3 is very special because in this level 3, whatever you are going to get here, by default you will get here in this, the level 3. Okay, all of this is included in this, the level 3. However, other than this, through the one-on-one Zoom video meeting, now in that I will give you entry and exit secrets, when to enter, when to exit. Then one premium hack every month. This hack has very high accuracy. Then one trading or options strategy. Again, this has very high accuracy. Then the modified technical indicators. So I have modified my technical indicators, okay, in order to predict the movement even before it is seen. I will share those modified technical indicators. Then options premium calculator. Okay, so more than 90, 97 or 98% people, traders who are trading in the stock market, they do not know how to calculate the premium value, premium price of any option. Okay, they are trading just blindly. So here I will tell you how to calculate the option premium value. All of this will be covered through this, the Zoom video meeting. Okay, and guys, remember, the hack and the strategies are something that you might not have seen or heard of. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, stock market opportunities, midweek update, and they know everything, okay, very well in advance, what is going to happen, what is happening, why that is happening, okay, and how to trade safely. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section, and you can follow that link, you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. Daily chart means one candle represents one day. Okay, so let's first discuss the candle, the last daily candle. Okay, so this last daily candle, if you notice, it's a good bearish candle, good bearish candle. Okay, good bearish candle, but it's not an absolute bearish candle wherein we can say that there will be a gap down open or so. No, this good bearish candle is simply indicating an initial or intraday bearish movement on Monday. That's it, nothing more than that. Okay, and there are multiple reasons. Okay, first of all, the candle itself. Secondly, it closed above the moving averages. Okay, and number 3, it has closed above the confluence zone. Okay, so that is why the market is in a condition wherein it can sustain. Okay, now the last daily candle of the Dow Jones, yes, okay, so that's the problem. It is there in the Dow Jones, so it's a heavy bearish candle in the Dow Jones. Okay, although it managed to sustain, it managed to close above the moving average or in between these the moving averages, but that's a different thing because it is indicating a trend change. Okay, a short-term trend change, but this is not going to change immediately. Okay, so this candle does indicate a gap down open on Monday. Okay, or irrespective of any open and initial or intraday bearish movement on Monday. So exactly the same pattern we have seen on the weekly chart. Okay, that S&P 500 is not indicating any gap down, but just an initial or intraday bearish movement. But Dow Jones is indicating a gap down open. Okay, or irrespective of any open, an initial or intraday bearish movement on Monday. This means that now on Monday, one thing is confirmed, that there will be an initial or intraday bearish movement. There may or may not be, may or may not come gap down, but an initial or intraday bearish movement will be there on Monday. Okay, next Monday, means June 16th, and it is similar to what I have mentioned. Okay, here in the previous S&P 500 weekly technical analysis, that on the previous Monday, on 9th of June, there will be an initial or intraday bullish movement no matter what, and we have seen that there was the initial intraday bullish movement, and finally it formed a green candle. Okay, now let's talk about the technicals. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon, And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community in order to get these daily precise updates of the S&P 500 every day from Monday through Friday, then I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, what we can see here is that the S&P 500 is bullish through the Ichimoku cloud on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is bearish through the MACD on the daily chart. S&P 500 is bearish through the stochastic RSI on the daily chart. All other technical indicators are normal, good. This means that the S&P 500 is 60% bullish on the daily chart. On the weekly chart, we have seen that the S&P 500 is 100% absolute bullish. However, on the daily chart, it is only 60%. In terms of the Dow Jones is bullish through the Ichimoku cloud on the daily chart. Dow Jones is bullish through the Bollinger Bands on the daily chart. Dow Jones is neutral through the moving averages. Dow Jones is bearish through the MACD and bearish through the stochastic RSI. Bearish through the MACD, bearish through the stochastic RSI. All of the technical indicators are good and normal, indicating that the Dow Jones is now entering or has entered into the neutral trend on the daily chart. Okay, just like 50-50 neutral trend. Okay, but this does not mean that it is bearish, although it is neutral, but it is still in the bull side. Why? Because the moving averages are supporting the bullish. Okay, so it is neutral, but it is still in the bull side. So what does all of this mean, that it is neutral bullish or it is 60% bullish? This means that now the market, the entire US stock market is getting weak. It is getting weak. Okay, and if it fails to recover in next 2 to 3 days, okay, or by Tuesday, Wednesday, if it fails to recover, then we can anticipate more weakness in the market. Okay, but as of now, on Wednesday, FOMC event is there, but before the FOMC event, the entire market will remain in a condition to give limited bearish movement, okay, but at the same time will be in a condition to sustain, to recover and to sustain. It will remain in that condition. So the movement will be more clear in the next part, in the probable movement. But now there is very important thing, okay. This is repeatedly I mentioned to my Patreon community members, and this is regarding the MACD of the S&P 500, because it is forming a bearish slip on the daily chart. Okay, yesterday also in the pre-market analysis and in last I think 2 or 3 days, repeatedly I'm mentioning that to my Patreon community members, that MACD is trading bearish on the daily chart. All of the technical indicators were bullish, but MACD is bearish and it is forming a bearish slip. This is a problem because this can bring a heavy fall. This can push the S&P 500 down, okay, in the bearish side, and this can simply bring down the entire market. Okay, a heavy fall we can anticipate. And here in the MACD of the S&P 500, you can see the formation of the bearish slip. The MACD is bearish since 28th of May. Okay, from 28th of May, it has not turned bullish, the MACD. Okay, it is trading bearish. On 10th of June, there were chances that it would have turned bullish. Okay, but on 11th of June, okay, after when it entered into the 604x and 606x, it failed because of that bearish, and yesterday again a fall, a bearish. So a bearish slip in the MACD, okay, whether it happens in the MACD or it happens in the moving averages, generally, okay, it happens in the moving averages. A slip in the MACD is rare, but whenever it happens, okay, it indicates that if it is a bearish slip, means fall. If it is a bullish slip, means bullish movement, okay, upward push. This is how it works. Okay, this means that yes, now the pressure is there, pressure is growing. Okay, the technicals, okay, the big technicals, the moving averages and the MACD are putting pressure on the market. So now, before I discuss the probable movement, I have this important information to share with you, that this is my S&P 500 knowledge transfer program. Through this S&P 500 knowledge transfer program, whatever I know, whatever I have learned through my experience or everything, I share everything, okay, through this S&P 500 knowledge transfer program. So I will teach you, okay, everything, including the basics, the advanced, okay, all of the technical indicators, the modified technical indicators, everything. And I will help you set up your charts, then the trading strategies, all of the trading strategies, then market analysis, how to analyze a market. Then comes the options calculations and the trading strategies. I will teach you all of the options, okay, from basics to advanced, including the options premium calculator. I will teach you how to calculate the option premium value. Then the support and resistance levels for next 5 years. Okay, I will give you these my calculated support and resistance levels. Then the price prediction, how to predict the price. For example, recently I mentioned that it will fall in the 606x or somewhere in between 604x. Okay, and it came down. Before that, I have predicted that the maximum it will form, the all-time high will be 614x. It was 614x. Okay, so these kind of way. So limit, how to predict the limits, intraday limit, okay, weekly limits, how to predict these the limits. Then the trend analysis, how to deduce the trend. Okay, then how to convert the manipulation traps into opportunities. Then comes the hacks. These hacks are very accurate and have very high accuracy, and you can predict immediate movement, okay, on the hourly, 4 hourly, 2 hourly, okay, or the 30 minutes, 15 minutes, okay, that kind of movement through these hacks. And these hacks are something that you might not have seen or heard of. And these are some important terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, then this is my email address. This is my email address. Okay, and also I've given the link to this program in the description of the video and also in the comment section. And one more thing, guys, whatever I'm going to teach you here, although the name is S&P 500 Knowledge Transfer Program, okay, but whatever I'm going to teach you here will be applicable to any stock, any index, any ETF, any crypto, or anything that is traded in the stock market. So guys, once again, this is my email address, and the link to this Google spreadsheet is in the description of the video and also in the comment section. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 in the next week. Okay, means what is going to happen in the S&P 500, in the Dow Jones, and in a manner to the entire US stock market. So first of all, you need to understand that Wednesday will be very, very important, very, very crucial, because on Wednesday, the FOMC event is there, FOMC, Federal Open Market Committee. Okay, so we will come to know about the decision. So on Wednesday, okay, the committee decision will be released, although there are like 99% chances that there will be another pause. Okay, and this is through the tools, okay, that the market movers they have. Okay, through their tools it is like 99% confirmed that there will be another pause, but that's not a problem. Problem is the SEPs, okay, the economic projections, because if the economic projections and the note that will be released that will say that there is another pause, if that note or the SEPs indicates recession or mention the word recession, then we can expect no more bullish movement, no more this the word movement, just the fall, and then the beginning of the recession, you can say. Okay, so if you're my Patreon community member, then make sure that you are available on Wednesday, okay, after 1 p.m. Eastern time. Okay, I will give you back to back these constant, okay, updates, regular updates, so that you can make changes to your trades. And also when there will be the press conference of the Federal Reserve Chairman, there will be heavy volatility. So I will open the comment post, okay, and I will give you these are frequent updates, so you can make changes to your trades. Okay, so this will be the most important event, okay, the FOMC event, and this will set the course, or this will further tell us whether there is any more room in the bull side or just the correction and then the recession. That's it. Okay, so Wednesday will be decisive. Okay, 19th of June will be the holiday. Now let's talk about the technicals, the numbers, and everything. Okay, so first of all, you can see, yes guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, what we know is that there is a confluence zone. This is a confluence zone. Okay, Any fall will be handled by the confluence zone, just like yesterday it was handled by the confluence zone. And again in the previous S&P 500 weekly technical analysis, and also again and again in these the daily precise updates, especially yesterday in the pre-market analysis before the open of the stock market, I mentioned that the confluence zone will be able to handle the fall and then a recovery. Okay, so there was 1% recovery intraday from the confluence zone, and again second time when it came down, then the confluence zone, okay, the fall was limited to the confluence zone, and it again the S&P 500 sustained and survived and closed above the confluence zone. Okay, so confluence zone is the most important factor here. So as long as the fall is limited, restricted, and the closings are above the confluence zone, okay, or at the confluence zone, fine, no problem, no bearish side movement, nothing. Okay, or even if there comes a breach of the confluence zone, then also it will be recovered. Okay, but now, yes, one more thing, as of now, okay, confluence zone is there, it is working. This means that on Monday also the confluence zone, okay, it should work, it should be able to hold the fall. Even if there comes a breach, then also it should be able to recover. Okay, but if there comes two consecutive hourly closings below the confluence zone, then that will be problematic, because that will be the only case where we can anticipate more fall. And also there will be a good probability that by the end of the day S&P 500 may close below the confluence zone. If it closes below the confluence zone, this means that the market has already accepted, okay, that there is no more bullish future and it is going to fall. Okay, the confluence zone. Now as long as S&P 500 is sustaining at or above this the confluence zone, okay, then it will be having potential to move to the 606x. Okay, 606x only for one day, as the upward movement to the 606x will be restricted. In between the 606x and the confluence zone, there is one small zone, okay, that is around the 6000 psychological level. Okay, after that there is my calculated level, very heavy, that is 604x. Okay, but 606x I am talking about. After the confluence zone, sustaining above the confluence zone, it opens the 606x. If it sustains, or when it sustains above the confluence zone, okay, then it will try to move to 606x. It will be able to means the bullish movement will be restricted to 606x. It will take a break just for one day. Next day there must come a gap up open, or immediately after open it should breach the 606x. And if that happens and there comes back to back 3 hourly closings above 606x, then it will be heading to 6147. That is the all-time high, but it will not be able to hit 6147. No, it will fail before it hits the 6147. So in this manner the bullish side is expected to be limited in the next week, okay, towards 6147, but a hit, okay, to 6147 is not guaranteed. It can move towards, okay, and it can fail anytime, okay, even before hitting the 6147. Okay, but a hit is not guaranteed, and this will be in the bull side. Okay, now the bearish side, as I mentioned, the bearish side will be triggered only when the S&P 500 loses the confluence zone, remains below the confluence zone, sustains below, and the hourly closings are seen below the confluence zone. When that happens, then only there will be the bearish side. The bearish side will open. Now the bearish side will be open to what? Initially the bearish side will be limited to the 593x, but then comes the most important one, that is the 590x level. Okay, last time also for many days it has worked. Okay, so any fall for now will be limited to the 590x once it loses the confluence zone. Before that there is 593x, then the 590x. Now everything will remain under control, okay, and normal, okay, fine, as long as the fall is limited to the 590x. Okay, only when it loses the 590x, then all bullish side movement will be ceased, will be restricted, will be limited. No more bullish movement will happen, at least for next few weeks. Okay, and then we will anticipate more and more fall, and then it will come to the zone that starts from 585x. Then that fall, or any kind of fall, will be handled by the zone. On Wednesday, on Wednesday, when the FOMC event is there, FOMC minutes will be sorry, not minutes, but the decision will be released, the SCPs, the projections will be released. Okay, if there comes heavy fall, then also for one day the this zone that starts from 585x, it can handle the fall. Otherwise it will not be. Otherwise from the second day onwards it will not be, and then eventually it will be moving towards, finally it has to move towards 5300. Okay, so that is in the near term, that is, this is something that we are looking for, 5300, okay, during the fall. And this is easily achievable. This is well under the correction range, okay, not the recession. Okay, because for the recession to happen, S&P 500 should lose 5000. Okay, the 5000, it should enter into the 4000 range. Okay, just like last time it did, okay, when the president managed to save, okay, the market. Okay, so below 5000 the recession will start, up to 5000 it will be the correction. Okay, so in this manner, so yes, until Wednesday, only until Wednesday. Yeah, one more thing, very very important, and I've shown you on the weekly chart of the the Dow Jones, that the moving averages have not given a confirmed bullish crossover. This is not there, and this is the technically this is a problem, because if there comes a good red candle, weekly candle, okay, good red weekly candle in the next week, in that case there will be the formation of the bearish slip. Bearish slip will be confirmed. Okay, once the bearish slip is confirmed, then we should be ready for a minimum of 10% fall in the entire US stock market. S&P 500 and Nasdaq, okay, there will be no exceptions, because this 10% will be seen in the Dow Jones. So 10% in the Dow Jones means 12 to 14% in the S&P 500 or in the Nasdaq. Okay, this is the standard practice. So this bearish slip is what it is going to cause the problem. Now, even before this, the bearish slip, there is again this is the problem that I have discussed in the daily chart section, that there is already a bearish slip in the MACD. Okay, and again repeatedly to my Patreon community members, I have mentioned this, the bearish slip, okay, in the MACD, and that can trigger, you know, sudden or heavy fall in the market. So this means that any more fall, any more bearishness will simply make the situation worse, not better, but worse. Okay, that is why the confluence zone is the last, it is the last resort. S&P 500, as long as it is holding, sustaining and closing at or above the confluence zone, it is fine, perfect, no problem. Loses the confluence zone, then we should be ready for the fall, back to back fall, not back to back, but the cycle, the bearish cycle will then resume. Okay, whatever this the bullishness S&P 500 or the Nasdaq have gained, this bullishness will not work anymore. Okay, then back to back fall or this will happen. Okay, and this will be again, this will be further confirmed by these two, not two but one. So the bearish slip is there in the MACD, it is confirmed. Bearish slip will be there in the moving averages of the Dow Jones. It will be confirmed by next Friday when the weekly candle will close, depending on how heavy it is. Okay, values of the moving averages. But I think by Wednesday, by Tuesday, Wednesday itself, if you are my Patreon community member, I will tell you, okay, if this is really happening or not. Okay, this is the bearish slip on the weekly chart of the Dow Jones. Okay, in case of the S&P 500, confluence zone is everything. It is everything. Okay, for the bulls and for the bears. Okay, and 606x, now it will not restrict the bullish movement. It will restrict the bullish movement only for one day. Only for one day. Thereafter, it is free to move towards 6147, but a hit to 6147 is not confirmed. Fall from here means 590x, that the strong support level, and then the zone that starts from 585x. Once it loses, then 5700 range will be there for the S&P 500. Okay, so in this manner, the next week, this the weekly, sorry, not weekly, but the FOMC event on Wednesday will clear the picture. Okay, whether there will be any bullish movement or the bearish movement. And if you're my Patreon community member, then I'm reminding you once again that just be attentive after 1 p.m. Eastern time on Wednesday, because I will give you frequent updates, okay, and make changes to your trades accordingly. And guys, if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. So guys, hit like if you have liked this video, and your appreciation matters a lot. Subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.